This is the Asia Trade. I'm Paul Allen in Sydney, where the markets have just opened. The top stories this hour. Asian stocks look set for a positive start after Wall Street's best week since the November election. And Donald Trump's call with Xi Jinping helping sentiment ahead of his inauguration. TikTok is restoring service in the US after the president-elect said he'll halt enforcement of a ban to give ByteDance more time to find a buyer. And Hamas frees 3 Israeli hostages just hours after a ceasefire deal comes into force in Gaza. Well, we've just opened for trade here in Australia, the start of a new week. We do have a staggered open, of course, but we are just a few points to the upside in the early going. A couple of names that won't start trading until a bit later that we're keeping an eye on. Star, the troubled casino operator, says its revenue dropped 15% on last quarter to just 229 million Australian dollars. Star experiencing some serious cash flow issues, burning cash at an astonishing rate, and some questions over its future viability. We also heard from South 32, which is the world's largest manganese producer. That's a critical ingredient in the production of iron ore. Set to raise the output of almost all the metals it produces on quarter. So we'll keep an eye on that stock when it opens as well. Nikkei futures looking kind of flat at the moment. The yen carrying through some of that relative strength that we saw towards the end of last week, trading just above 156 at the moment, and the yuan rebounding a little bit as well. More perhaps a case of a dollar weakness there than anything else. Let's take a look at US futures. Meanwhile, of course, there won't be any trades in the US this coming Monday. The market's going to be closed for Martin Luther King Day, but we do see futures just nudging a little bit further into positive territory. Bond futures also reflecting the slight reduction in yields that we've seen towards the end of last week. Crude prices, meanwhile, holding pretty steady. Oil had a terrific week last week, coming off a very strong week, 4 consecutive weeks in a row of gains as US inventories sink with cold weather. And on the topic of cold weather in the US, the US President-elect Donald Trump has been celebrating with supporters in Washington ahead of his inauguration. Senior editor Derek Wallbank joins us for more. Derek, just as we went to air, President-elect Trump wrapping up his remarks. What was he saying? What's his message?
Well, Paul, in short, the message is that in 24 hours, America is going to be great again. Donald Trump is signaling a shock and awe return to the White House with a flurry of executive orders. He told the crowd, that he had maybe been advised to sort of draw things out over weeks. And he said, absolutely not. We're going to go all on day one. We are expecting a lot of action from the incoming president and his team in that first 24-hour period. We're expecting executive orders and actions on everything from immigration, deportations, laying the groundwork for some things that he might want to do later. He is expected to give TikTok a reprieve. He is expected to take actions regarding the federal workforce that would give him and his team more control over the U.S. government's sort of executive authority. He's also supposed to take action to curb diversity and equality initiatives, those sort of DEI, as well as potentially put in a mandate to have federal workers return to office, more of them 5 days a week.
Yeah, and also proposing the possible construction of a US version of Israel's Iron Dome. So he's still speaking there, running a little bit over time, appears to be enjoying the moment. But you mentioned Elon Musk as well. We're reporting that Elon Musk might become something of a shortcut for lobbyists wanting to gain access to the president. How viable is that shortcut? What more do we know?
Well, look, Elon Musk is going to be one of the co-heads of Donald Trump's Department of Government Efficiency. Now, this isn't an actual government department, despite the name, but it is the sort of watch place for people to sort of figure out how the government ought to be organized. Now, that's quite a powerful thing if it is quite influential. And Trump had Musk at his rally come up, say a few words to the crowd. Look, there's no doubting the fact that Trump and Musk have become quite close, certainly politically over the last couple of months. The billionaire has poured millions of dollars of his own fortune into seeing Trump elected. Trump was elected. Musk has a ton of business before the federal government. Trump admires Musk. It's very clear to see that there's a sort of fascination on both sides. And so Musk would be a powerful friend to have if you were a sort of person who needed friends in Washington. It would be no surprise to see Musk be somebody who is going to be very, very courted by all sorts of people who have that business before Washington.
All right, Bloomberg senior editor Derek Wallbank there. And Bloomberg will be having special live coverage of the Trump inauguration. That'll be across all of our platforms coming up 11 a.m. Monday Eastern Time. That's midnight in Hong Kong, 3 a.m. Tuesday in Sydney if you want to get up for that. And subscribers can also turn to the Bloomberg for more on this. You can go to TLive Go to get commentary and analysis from our expert editors. Now, Derek mentioned that the Chinese-owned social media app TikTok, it's restored service in the US after briefly going dark to comply with a Supreme Court ruling. The reprieve came after President-elect Trump promised an executive order giving ByteDance 3 more months to find an American buyer for the platform. Now, Chief North Asia correspondent Stephen Engel joins us now with more. So, Steve, Trump's proposal for TikTok, not without controversy, even within his own party.
Yeah, that's absolutely right. We've heard from the House Speaker, we've heard from the Senate, intelligence head, all saying that it's not legal necessarily for Donald Trump to extend this by 90 days. Now, if you go back to that April law, national security law, which essentially started the clock ticking, so to speak, on TikTok, finding a U.S. buyer, as well as that deadline of Sunday, January 19th. If those stipulations were not met, then it would have to be pulled down from the likes of Apple, Apple Store and other services that provided this social media app. Well, it did briefly go down on late Saturday in the U.S. after the Supreme Court unanimously, I might add, essentially upheld the law. But again, they're now back up in the United States after the president-elect, you see here on TikTok himself, essentially giving that reprieve. But that reprieve has a lot of caveats. That 90 days, he must go to Congress and essentially get the extension certified. The rule, I won't get into the law, word for word, but essentially he needs to show to Congress that there is a justified process already in place. In fact, a qualified divestiture is already in motion. We don't know if that is the case. We've heard Elon Musk being floated by the Chinese. We've heard other companies over this long saga be brought up. But again, there's a lot of uncertainty now whether that extension is going to be certified by Congress, which, keep in mind, that law back in April was passed in a bipartisan bill, and it was signed into law by the Biden administration. So there's still, TikTok is not out of the woods here. Yes, they're back up in the United States, but there could be some more legal wrangling going ahead.
Yeah, well, if we wind back the clock even further, it was Donald Trump that initially began mounting very persuasive arguments about the national security threats posed by TikTok. He initially supported the ban, so why the reversal?
Well, there was some political expediency involved here as well, because, again, he acknowledged that having TikTok and the young users, largely younger users, could be helpful to his campaign. And by some accounts, it did help that he was an advocate for the TikTok reprieve, if you will. We just have a soundbite now from Donald Trump talking about his reasoning and why he's doing this. Let's hear from Donald Trump.
They're out of business. They're worth nothing. If you do approve, they're worth like $1 trillion. They're worth some crazy number. So I said, I'll approve, but let the United States of America own 50% of TikTok.
Now, another interesting twist to this is as well that Donald Trump and Xi Jinping have spoken, and they've spoken about TikTok. And National Security Advisor, incoming National Security Advisor Mike Waltz says Trump and Xi Jinping have agreed to work together to save TikTok in the United States. So that's another interesting twist, that day one, TikTok is a top priority. But at the same time, TikTok users have also, last week we got those startling numbers about the number of downloads of Xiaohongshu, another social media app from China, which is known as Red Note in the United States, as perhaps a hedge against a TikTok ban. They could be moving to Little Red Book, a very Maoist title, of course, Xiaohongshu. Interesting.
Yeah, Chief North Asia correspondent Stephen Engel there. Well, Hamas has released 3 Israeli women from captivity just hours after the Gaza ceasefire deal came into force. And they are the first of 33 hostages set to be freed as Israel begins preparing for the release of 90 Palestinian prisoners. Bloomberg editor Michael Heath's been following developments, joins us now. So we're seeing that first exchange taking place after a bit of a hiccup at the start. How's this exchange going to work, and can it be expanded?
Yeah, so the idea, as you mentioned, Paul, is that there will be 33 hostages in total, and Israel, for the first 3, will release 90 Palestinian prisoners. So it's about a 30-to-1 switch that will go on there. There was a hiccup because that Hamas took some time to actually hand over the names. So what was supposed to come into effect at 8:30 actually came in at 11:15, but it has, and Israel actually kept its attacks going during that time as well, sort of to keep up the pressure. But it now looks like it has come to pass. This will run over 6 weeks, and then it's sort of a staged, a staged release that will keep going forward there for the hostages and the prisoners. And in the meantime, there's going to be a lot of aid that's ramped up as well. Obviously we've got a devastated situation here. People who are really, really in need of support. But the interesting part too is, despite 15 months of conflict, it's sort of Hamas that's emerged. Its police are back on the street. Its armed fighters, while they're not firing guns or anything at the moment, they sort of have all emerged. So Israel's idea of removing Hamas as part of this campaign doesn't seem to have succeeded yet. The question, of course, then is, can they go to a second stage, which would be a complete peace? And that's, I guess, where people will start focusing on fairly soon.
Yeah, so that's kind of the next question, is it? What are the risks of this ceasefire not holding, particularly considering Israel vowed to wipe Hamas out, and as you say, here they are back out on the streets? Yeah,
I mean, look, the risks are very, very high that this doesn't go forward. I mean, it's a 6-week deal, so it's a reasonable amount of time. But what Egypt and Qatar are really keen to do is to sort of make it a process where it becomes difficult to reverse it, to even start to get some reconstruction going in there. I mean, there's no schools for children in the Gaza Strip. There's obviously, housing, everything has been destroyed. So they want to start getting things happening quickly. We've already seen an official from the Israeli government, one of the ministers resign, one of the right-wing nationalist ministers. So whether it all holds is a question. And as you said, Prime Minister Netanyahu vowed to remove Hamas from there. But the other thing he's done is he won't support the Palestinian Authority, which governs the West Bank. And so who would replace Hamas if you do manage to get rid of them is a really open question there. So there's all the portents of it renewing, the fighting renewing, but you also have President-elect Trump there who's very keen for this war to come to an end. So there'll be pressure on Netanyahu from both sides.
All right, Bloomberg's Michael Heath there. Still to come on the Asia trade, we will discuss the outlook for BOJ policy with Vanguard and Mizuho Securities. Asia joining us next to talk Trump trades as well. Plus, as TikTok restores service in the US, we're going to look at the future of the app with EMarketer. This is Bloomberg. Here's a quick look at the week ahead. Donald Trump, of course, going to be officially sworn in as the 47th US president later on Monday. China's Vice President Han Zheng will attend the inauguration along with tech executives, including Meta's Mark Zuckerberg and TikTok's Xiaoji Chu. Trump has said he'll issue a flurry of executive orders as soon as he takes office. Now, his comeback's also expected to dominate conversations at this week's World Economic Forum in Davos. Trump himself will address the event remotely. And on the economic front, we're awaiting GDP data out of South Korea and inflation numbers from Japan. And the Bank of Japan also widely expected to raise rates on Friday, barring a market shock triggered by Trump's first few days in the White House. And that is your week ahead. Well, joining us now is Qian Wang, Chief Asia-Pacific Economist at Vanguard Group. Qian, I want to start with the Bank of Japan, if I can. As I mentioned there, we've got overwhelming expectation that we will see further tightening from the BOJ this Friday. I'm just wondering your thoughts on that, and assuming you agree, what's next for the BOJ?
Thanks, Adam, for having me today. I think when you look at the, BOJ, right, we were expecting them to hike in December. They didn't. As BOJ was saying that they want more clarity on the U.S. policy as well as wage data. I mean, I think the question right now is what has really changed from December. The fundamentals certainly, I don't think changed much. In fact, I think, the yen depreciation actually further increased the inflation pressure down the road. But I think what is really changing is over the last week, you do feel that the the BOJ policy stance seems to be changing, right? They are talking about more confidence about wage growth. They feel like the inauguration will give more clarity on the direction of the, U.S. policy, and they are ready to talk and discuss about the rate hike this week. So I think that actually raised the market expectation for a rate hike. We do expect a rate hike, this week. If the market condition allows, what I'm saying is that as long as there's no major financial market turmoil caused by the U.S. policy, if we do get that, then I think BOJ is on track for a rate hike and continue tightening this year. But I think, the uncertainty is really about the U.S. policy and the potential financial market reaction.
Yeah, well, I actually want you to wade a little bit deeper into that unpredictability if we can, because, of course, as I mentioned there, incoming President Trump promising a flurry of executive orders. Where do you think we sit on the spectrum of risk that there is going to be some kind of curveball, and what could it be, or maybe nothing at all?
Well, I mean, Paul, seriously, I think this is where the uncertainty is really high. There is a wide range of possible outcomes. Right, it could be worse than the market is feared. It could be exactly what the market is feared, or it could be better, right? And what if the tariff is actually more targeted or more incremental, right? So I think this is where we're sitting, in 24 hours or something. Then there is huge uncertainty waiting, ahead. So that's where I will be, thinking the market volatility is going to be pretty high in the coming days.
Yeah, I think we can be fairly confident that we'll see tariffs. That's been fairly clearly telegraphed here. And we have a chart on the Bloomberg terminal that just illustrates how much US income from tariffs have surged since 2018. But we've got to remember at the same time, don't we, that this is potentially a driver of inflation. The tariffs are paid by importers. They pass that cost on to consumers. With that in mind, what's your expectation around inflation for the US in 2025?
Yeah, I mean, this is where, we do expect U.S. inflation to remain pretty sticky, above 2.5%, even at the end of this year, right? So to a certain extent, for the U.S. economy, it's another year of no landing, right? You have growth holding up pretty well, about 2% growth. You have inflation come closer to the central bank 2% target, but not there yet, right? So just another year of no landing. I think in terms of the inflation story, part of that is fundamental, right? You still have the strong growth, and then, around 4% wage growth. That is going to keep your core inflation, especially core service inflation, very sticky. But on the other hand, I think there is also concerns about this trade policy, about, potential immigration policy as well. That is going to reduce labor supply and potentially, contribute to inflation pressure in the U.S. as well. So, yeah, that's just sticky inflation. And as a result, I think central bank Fed is unlikely to cut that much in 2025.
Yeah, we have seen traders trimming their bets on the amount of easing that we're going to see. Where do you think the floor for rates is? And is it possible that we're there, that this is it?
Mm-hmm. Yeah, I mean, we still see two more cuts this year. I think the market was a little bit panicking, early so far this year, and then they are, literally pricing in less than one, rate cut this year. Well, I think the inflation data actually last week probably helped to bring some relief to the market. It actually comes slightly below market expectations. So one thing I would say is that inflation, I think, even though it's going to be sticky, but I do think that they are going to continue to trend lower. But I think we are confident about the direction of the inflation. Of course, I think, uncertainty aside, it's really about the potential policy on trade and tariff, what's going to happen there. But if it's in our baseline scenario, right, our baseline scenario is that, okay, tariff policy is going to be implemented in a phased manner, somewhere in between, the 60% we are expecting 30% on China and the 5% universal for the rest of the world. And immigration policy is also somewhat gradual, not unlikely to be large-scale deportation. Then in that case, we still see inflation gradually, coming down, even though it's not likely to come to 2%, by the end of this year.
Yeah, obviously, China, you mentioned they're likely to be the main focus of tariffs. And if we can turn to China now, we did have some reasonably strong data out of China towards the end of last week. GDP, industrial production, retail sales, all a beat there. Do you see this as a corner being turned, or are there more challenges ahead?
No. When I look at the data, of course, it's good news that the economy actually rebounded, in fourth quarter after the policy pivot in late September. But if you really look into the details of the growth, you saw a lot of the growth driver that is unlikely to be sustainable down the road, right? One, you do see the IP, as you mentioned, is so strong versus such weak domestic demand. Then obviously that was pretty much explained by the export front loading. Then this is not going to be sustainable when tariff is raised. And the second, I think, is consumption that's picking up, especially for durable goods benefiting from the trade-in subsidy program. This is actually literally front-loading future demand into today, right? So eventually there will be payback down the road as well. And the fundamental for consumer and consumption is not that strong. And, and also even the housing, right? We look at the housing sales, some of the, housing activity in the market actually start to recover and rebound a bit. But this is also unlikely to be sustainable when everybody knows that the housing downturn in China is a structural, situation.
Yeah. All right. Qian Wang, thank you so much for joining us. Qian is Chief Asia Pacific Economist at Vanguard Group. And stay with us for special coverage of the World Economic Forum's annual meetings in Davos. We'll be talking to global leaders, including IMF Managing Director Kristalina Georgieva and BlackRock Chairman and CEO Larry Fink. That's all this week on Bloomberg Television. We have more ahead on the age of trade. This is Bloomberg. Let's take a look at a couple of the movers here in Sydney. South 32, the world's biggest manganese producer, having a good morning, up better than 1% after saying all the output of its metals it produces increased on quarter. Star Entertainment, meanwhile, continuing to sink further. Its December quarter revenue falling 15%. This is Bloomberg. All right, let's take a look at how we are tracking here in Australia. The ASX modestly higher at the moment. I just want to mention Star again, the embattled casino operator here. Its second quarter revenue fell 15% on the prior 3 months. That was down reported revenue of about $185 million US. The casino operator running out of money, and it's pleas for a lifeline to the New South Wales and Queensland governments being rejected. Meanwhile, we've got Nikkei futures pointing higher. There's, of course, course, Bank of Japan decision week. We'll have some data out of Japan later as well. We'll have core machine orders and industrial production also. S&P futures looking a little bit softer, but there won't be any trade in US markets on Monday, closed for Martin Luther King Day and also the inauguration of President Trump. Well, SK Hynix, Disco and Nidec are some of the big Asian earnings reports to watch out for this week after TSMC projected strong quarterly sales, and that's fueling hopes that AI hardware spending remains resilient. NVIDIA suppliers SK Hynix and Disco are expected to report positive earnings thanks to the newly announced Blackwell chip product line. Let's bring in Bloomberg News earnings specialist now, Reina Sasaki. So, Reina, tell us about some of the highlights expected out of Asia this week.
Yes. So falling wages and then high inflation in India might have dented earnings for the India earnings, but we are expecting SK Hynix, Disco, and then Nidec from Korea in Japan earnings to be bolstered by robust demand for AI-related demand and in its products. SK Hynix operating profit will likely surge from a year earlier, which was a relatively low basis, and the quarterly growth was likely supported by a high average selling price for DRAM chip and robust demand for memory chips for AI.
So you mentioned SK Hynix there. How about Disco and Nidec? What are we anticipating from them?
Yes, so for Disco and Nidec, we're expecting their third quarter operating profit to grow double-digit this quarter as they report on Thursday, and thanks to the AI-related demand. However, for Nidec, analysts expect that the lofty expectation could be risky, so the investors are watching out whether the company can meet the guidance, as its target is tailing the consensus at the moment.
All right, Bloomberg News earnings specialist Reina Sasaki there in Tokyo. Let's get the latest now from the corporate front. Hyundai and India-based TVS Motors are exploring a partnership to make electric three-wheelers and micro four-wheelers for the last-mile mobility market in India. They presented concept models at a car show in New Delhi, announcing that Hyundai will focus on the design, engineering and technology. TVS, meanwhile, will manufacture, market and co-develop the vehicles. Instagram has announced a new video editing app called Edits, set to be launched in February. The announcement comes as rival TikTok faces uncertainty in the US due to a federal sale or ban law. TikTok's parent ByteDance owns a popular video editing app called CapCut, which was also taken offline in the US. Rakuten Group CEO Hiroshi Mikitani is dismissing skeptics who called the Japanese e-commerce giant's mobile foray a mistake. Mikitani told us exclusively that the company's telecom arm is central for future growth through artificial intelligence.
Whether you can utilize AI in a very efficient and economical way or not is a key. I'll give you an example that, of course, when Google started shopping search, everybody said, oh my, Google is going to take over shopping world, right? The fact is, it was not, right? Amazon, Rakuten, maybe some other e-commerce companies are very, very strong. So I think and we don't use Google search. We have developed our own search. So there's two things. One is what we call very strong AI, which is like a generative AI, like OpenAI or Gemini or whatever. And there's more, vertically specific AI, which we call it weak AI. So we have no intent to compete against, OpenAI or Google, but we will actually build the more vertically integrated specialized AI.
Within Rakuten?
Within Rakuten, with our own large language model. Of course, we use the external third-party LLM, but also we are developing our own.
How much of that development is in-house? Because I do know that you have strategic cooperation with OpenAI as well.
Yes, yes. So generative AI, again, we use OpenAI. Sometimes we hybrid with our internal large language model. So if you just think the question or prompt is about shopping, we use it. But if I ask about medical questions, we cannot do this. So we go to OpenAI or third-party AI.
The future of artificial intelligence takes so much energy. Is there enough energy to power that change here in Japan?
Well, of course, two things. One, of course, just GPU will consume more electricity, but it depends on the design of your architecture, right? Do you need to compute everything from scratch, or can you memorize some of the question that's being asked and you process already for a longer time by caching the knowledge? Is it possible or not? And at the same time, using AI, in general, we may be able to reduce electricity consumption. 90% of electricity we're using in Rakuten Group is coming from mobile business. Of course, we have a big data center. All these radio stations use electricity. But in 2025, we are going to reduce our electricity consumption by 20% using AI.
And I know that in itself, when it comes to energy efficiency, you're carrying out trials with Ampere in order to cut some of that energy usage as well. What are your plans on that cooperation? Because we're also hearing that SoftBank's arm perhaps wants to take over that business as well.
Well, with regard to semiconductor, we are not really sure. Of course, ARM is a beautiful architecture. I know that Masa is making big bet on it, but so was other semiconductor companies. But I think the architecture will become more and more efficient, and we want to be platform agnostic. So whoever we can partner, we'll partner.
So do you ever think, oh, I should be owning one of those as well for my future long term?
No, in a big scale. It's not our business. Our business is more centric in utilizing data, providing a better experience to the consumer, and let them transact. So that's our business, except our mobile network technology business. Because I think what we have done in Japan is not only disruptive in terms of the customer, but technologically it's fundamentally totally different from what other carriers has been building.
That's Rakuten CEO Hiroshi Mikitani speaking exclusively to Bloomberg's Shery. And AI, of course, will be in focus at the WEF meetings in Davos this week. We'll be there speaking to a host of global tech leaders, including OpenAI CFO Sarah Fryer and Anthropic Chief Dario Amodei. You can catch those interviews here, and subscribers can also catch up on the terminal and Bloomberg.com. Other stories that we're following: a South Korean court has issued a fresh warrant to formally detain impeached President Yoon Suk-Yeol. It allows investigators to keep him in custody for up to 20 days as they look into criminal allegations over his martial law declaration. If charged within that period, Yoon will stand trial and can then be detained for up to 6 months. China's military says it conducted naval and air combat readiness patrols in the South China Sea on Friday and Saturday. A statement by the Southern Theatre Command did not specify exactly where the patrols happened. On Friday, the Philippine Navy said it was holding drills near a disputed shoal where a large Chinese vessel had been seen. Still ahead on the Asia trade, we discuss investment opportunities with FinCity.Tokyo as the Japanese capital vies to become a world leader in asset management and fintech. This is Bloomberg. Japanese markets opening at the top of the next hour. We still have a fairly weak yen, although it did strengthen a little bit towards the end of the last week, mainly story about dollar weakness, perhaps. 156.37 the yen at the moment. Nikkei futures poised for modest gains today, well, an upside there of about 0.75%. The yield on the Japanese 10-year, meanwhile, just lifting ever so slightly, 3 basis points. We are, of course, standing by for that Bank of Japan rate decision on Friday. Traders pricing in a 90% chance of further tightening. And in a moment's time, we will have core machine orders out of Japan for the month of November. Now, though, time for Japan ahead on the Asia trade. This week, we're speaking with an organisation focused on building Tokyo's asset management and fintech ecosystem. And my co-anchor, Shery, standing by with our next guest, Shery.
And Paul, joining us now is in the Tokyo studio, Keiichi Aritomo, Executive Director of FinCity.Tokyo. Great to have you in the studio with us. So tell us a little bit about your organization, because you're not a government branch, but you're being funded by the Tokyo government.
Correct.
What do policymakers want to see here?
Yeah, thank you for asking. So FinCity.Tokyo is a quasi-government organization, 70% funded by Tokyo Metropolitan Government, and remainder is funded by private sector organizations, mainly major financial institutions. Our mission is to promote, but also upgrade Tokyo as a financial ecosystem in a continuous manner.
How much progress do you think you've made in the last few years?
Yeah, so progress has been significant, actually. However, it's not necessarily quite impressive from an external point of view, because we started from a very, very low situation, as you may be aware. For example, FSA has been accepting financial license, institutional license in English. And then they committed to get this done within half a year, right? So it used to take forever, and you never know, you get it when you get it, right?
Yeah.
So that was a kind of situation, actually, 5 years ago, right? So, and then all the application has to be fully in Japanese on a face-to-face basis, and you have to submit all the papers, in person, etc. So that was a situation. Compared to that, we have made a significant progress as well.
It's unbelievable, given that if you're trying to become a global financial hub, English, just the ease of business, not to mention taxes, need to be in line in order to attract the foreign capital and talent as well, right? Are those the metrics that you're using in sort of measuring your success at this point?
Those are the key elements to make Tokyo investable, and also, accommodating, financial talents as well. So, so English is, people often say Japanese don't understand English. It's not true. Japanese spend many years learning English, so most of Japanese understand English, but they cannot express themselves comfortably in English. So we have to, cut the, get rid of some perception gaps from an international perspective.
That's really a cultural and social issue, right? That takes time to change. But what about the bureaucratic red tape? You mentioned some of the progress that you've made in some of the forms and accepting English forms as well. I think a lot of the hesitancy with companies coming to Japan is having the capacity to do business in English, not to mention as well, as I alluded to, the tax landscape, right? How do you make it competitive, especially if you're competing against the likes of Singapore and Hong Kong, for example?
Exactly. So Japanese taxation is quite unpopular, right? And also largely misunderstood as well. So of course, headline tax rate is so high, and one of the highest countries in the world. But effective tax rate is not this high, and we have a lot of misunderstanding about inheritance tax, exit tax. However, there are quite a few also Japan-specific, very weird, peculiar taxations in Japan, because it's not necessarily easy to, gain buy-in to reduce income tax rate for international people only, especially in financial institutions, financial-related people, because they're already making enough money, right? So there's a stigma against people in finance. However, we have to get rid of some very peculiar Japan-specific taxation, such as performance-based income tax not being deductible from corporate income tax.
Right.
So that's Japan is only one, right? So we address those issues, and also you're going to talk about probably startup environment.
Yeah.
One of the obstacle for international LP investors to put money into Japanese startup through LPS, limited partnership, is PE tax, permanent establishment tax. If you invest more than 25% of the invested companies, then you get permanent establishment being recognized in Japan.
So it seems that there is a broad and deep understanding of all of the issues that Japan has in order to become the next financial hub, right? So what is right now the issue with actually implementing change, or fast enough change that will keep up with global standards?
Yeah, so we have to manage our expectation. Nothing can be fast enough in Japan, right? Because we are dealing with deep state, highly siloed government agencies, one by one, right? So even like pension fund reform, we have to deal with Ministry of Welfare, as well as Ministry of Finance and Financial Services Agency, right? And also when it comes to startup investment, we have to do with METI. And so we have many different deep silos as well. So that's kind of given. And then we have to bridge the gap one by one. Yep.
Right now, there's so much excitement and focus on Japan. We have seen a lot of financial companies trying to open branches, trying to hire more people in Japan, just because we have seen the recovery, gradual as it may be, in the Japanese economy. What is the concern of missing the boat if the changes don't happen fast enough when there is so much interest right now? And how are you relaying that message to the Japanese government and every agency that needs to go through those changes?
Right. So I guess there are many things going on in the world. And this world is, as you may be aware, must be aware, quite turbulent. But Japan's strength is stability. Right or wrong, it's stable. Probably this is the only country, politically this stable out of all the OECD, jurisdictions.
Yeah.
And this is only.
You're saying this on the Trump inauguration week as
exactly.
well.
Handing over the power is quite smooth, right? So it's almost like a non-event in Japan as well. So we visit many different financial centers and also many markets. I'll give you an example. When I visited Canada, Toronto, and I gathered the largest pension funds in Canada, they are interested in Japan. But issue is they don't know how to allocate more to Japan. Japan is a sizable market, and they want to wind down from China positions and where else to allocate to. Either India or Japan, but Indians are much more aggressive. Japanese are more like passive, right? We need to ask questions and probing questions, right? And they ask Japanese companies only provide. They're not forthcoming. They provide bare minimum information, right? So we have to change the investor engagement mindset and attitude as well.
Keiichi, Aritomo, you have your work cut out for you, but thank you so much for giving us an update of what you're doing, and do join us again to give us an update on the progress and the changes that you're seeing. Executive Director of FinCity.Tokyo. Catch Japan Ahead every Monday at 8:40 a.m. if you're watching in Tokyo, and subscribers can watch live on the terminal using the TV Go function. Paul.
Thanks, Shery. Just got some breaking news coming out of Japan. Core machine orders for November, and a very big beat, expanding 3.4% on month. The expectation was for an 0.8% contraction. That's also a pretty strong improvement on the 2.1% growth that we saw in October. On year, that translates to a 10.3% increase. A big beat there for core machine orders. More ahead on the Asia trade. This is Bloomberg. Let's take a look at how commodities are tracking at the moment. We're seeing iron ore on a 7-day win streak at the moment. That commodity was getting pretty beaten up recently. And of course, the pure play iron ore miner, Fortescue Metals, one of the best performers on the ASX at the moment. Also a factor for iron ore, we've got ports closed all along the Pilbara coast, including Port Hedland, which is the world's largest iron ore export hub. Those ports are closed due to an incoming cyclone. Aluminium also performing strongly, better by 1.82%. Well, Australia is going to introduce a new green aluminium production credit to assist smelters to switch to renewable electricity by 2036. Bloomberg's government reporter Ben Westcott joins us now from Canberra. So, Ben, can you tell us a little bit more about this and particularly where the energy is going to come from?
Well, the energy is going to be green, and unless they don't switch to renewables, they won't get these production credits. That's the whole point of this plan announced by Prime Minister Anthony Albanese just this morning. Basically, he's putting in $2 billion Australian, 1.2 billion US over 10 years to encourage aluminium smelters in Australia to switch from fossil fuels to renewable energy. And once they make that switch, if they make it by 2036, then they can get the production credits. But it's interesting because Australia is the world's 6th largest aluminium producer, and Rio has already welcomed this announcement. Rio has 2 smelters in Australia, and this all ties into the government's Future Made in Australia policy. They've announced previous production credits for renewable hydrogen and critical minerals. And so this sort of ties into that agenda we've seen of increasing domestic manufacturing with an eye on green energy.
Ben, of course, it's impossible to view any announcement like this not through the lens of politics. It being an election year, that election due to be announced soon. We've got a minute left. Can this policy survive if there's a change of government?
Well, it won't, frankly. Alternative Prime Minister, Opposition Leader Peter Dutton, has already said that if there is a change of government, he won't go ahead with this. He says it will push up power prices, and he's already opposed the previous production tax credits I mentioned before. Basically, this is the pitch that we expect to hear from both sides over the next 4 months ahead of an election. On one side, Labor is promising to build Australia's future. That's their campaign slogan, while the opposition wants to get Australia back on track. And to them, that means reducing energy costs. It means encouraging private investment, all those sort of things that it is using as its pitch to the electorate ahead of an election due by May 17th.
All right, Bloomberg's Australia government reporter Ben Westcott there. Market opens in Seoul and Tokyo coming up next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. And Paul, it's going to be an exciting week. Of course, we have Donald Trump being inaugurated as the 47th president of the United States. Not to mention, of course, it's also Bank of Japan Day.
Yeah, it is. Bank of Japan expected to lift rates by 25 basis points on Friday. But, incoming President Trump also promising what he describes as a flurry of executive orders once he gets his feet back under the Resolute desk. So it's going to be a very interesting week indeed.
Yeah, and World Economic Forum in Davos will have to contend, of course, with the inauguration of President Trump, as well as CEOs, business leaders gather in Davos to discuss the latest in geopolitical developments, the economy, and just a broader outlook. This is the picture across Japan as we're opening now the session with the yen at that 156 level against the U.S. dollar. We have seen significant strength, given that the expectation for that Friday BOJ decision is of a rate hike. Now we have seen some signals coming both from the governor, not to mention the deputy governor as well. And sources telling Bloomberg that we are seeing some signaling about the BOJ hiking rates on Friday. The Nikkei coming online up 0.7%, rebounding from those losses that we saw in the Friday session. We continue to watch the 10-year yield at that 120 level already. Take a look at how the Kospi and the Kosdaq are coming online in South Korea. Of course, we were contending with a more dovish hold, a surprise hold coming from from the BOK as well recently. The Kospi up 0.4% at the open as the Korean won holds steady at that 14.58 level. Of course, we will get fourth quarter GDP numbers out of South Korea later in the week as well.
Well, we've been trading here in Australia for about an hour now. We're seeing some modest upside for the ASX, better by about 1/3% at the moment. Iron ore stocks doing pretty well. Fortescue Metals, one of the better performing stocks. That's a pure play iron ore stock, and iron ore prices have been on a 7-day win streak. And on the topic of iron ore, we've also heard that Port Hedland, which is the world's largest iron ore export hub, has reopened. Category 3 cyclone Sean is now heading west back out to sea, allowing that port to reopen. But there are other iron ore export terminals on the west coast of Australia that we don't yet know the status of, whether they've reopened or not. If we take a look at energy prices as well, we've got an oil price which has been coming off a very strong week also, up 4 consecutive weeks now. US inventories sinking. We've had some cold weather as well, tougher sanctions crimping Russian supply. And we've got bond futures on the board for you because there won't be any trading in bonds due to Martin Luther King Jr. Day, also the president's inauguration. But we did see a modest lift in yields towards the end of Friday trade after initially slipping, and we've got market expectations for Fed cuts declining a little bit as well. Now 35 basis points of easing priced in by year-end, Shery.
Right, Paul, U.S. President-elect Donald Trump is planning an assertive start to his second term. Addressing supporters of a rally ahead of his inauguration, he's pledged the most aggressive and sweeping border measures while reiterating his tariff and tax plans.
We have to set our country on the proper course. By the time the sun sets tomorrow evening, the invasion of our borders will have come to a halt, and all the illegal border trespassers will in some form or another be on their way back home.
Senior editor Derek Wallbank joins us now with more on this. And Derek, we're just gearing up for another busy 4 years ahead. Of course, we had Trump 1.0 and just a barrage of news and headlines that the president made back then. We haven't even gotten started. Already we heard about a potential U.S. Iron Dome. What will you be watching as we head towards this inauguration?
Well, Shery, I listened to Donald Trump speak at his rally in Washington, D.C. He was telling supporters that America was going to be great again, basically tomorrow. He's going to start off with an absolute flurry of executive orders, executive actions, laying out a bunch of priorities. You know, he said on stage that some people had counseled him to spread them out over time, and he said, nope, we're doing it all day one. You can expect this sort of shock and awe to cover a lot of ground. You can expect it to cover things from immigration, setting the stage for some of that deportation work that he's talked about on the campaign trail, maybe giving us some insight into how far he plans to go and how far he plans to go very quickly. You can expect it to go, though, much further. It could encompass a reprieve for TikTok that he's talked about, orders about the federal workforce, orders downgrading federal diversity efforts, a whole bunch of different things that Trump has promised to do. And bear in mind, Donald Trump walking into this day one, I think market participants really need to understand, he's not operating in secret here, right? He's gone and campaigned on a whole bunch of stuff. He said, I am going to do this stuff, and now he's going to go do it. There are some questions about how far he can go with some of the actions that he's looking at. But remember that the Trump team is perfectly aware of the fact that they have what they see is a judicial system that is probably going to lean toward their interpretation of a lot of things, one, and two, would take time to get into gear if it were going to try and stop something. So the Trump team really, with that plus Republicans controlling the House, Republicans controlling the Senate, feels like it's operating with a bit of a free hand here.
Yeah, Derek, in terms of the Trump team, we heard a lot of supporters speaking at that rally today. Among them Hulk Hogan, John Voight, also J.D. Vance, obviously. But Elon Musk addressed the crowd as well. Let's have a listen to what he had to say.
This victory is the start, really. What matters going forward is to actually make significant changes, cement those changes, and set the foundation for America to be strong for a century, for centuries, forever.
Yes, so Elon Musk obviously emerging as a very influential figure in this administration. It's safe to say any lobbyist with a path to Elon Musk now has one to the president.
Yeah, absolutely. Look, if you pair the world's most powerful man with the world's richest man, you've got quite an alliance, don't you? And Musk has spent millions of his personal wealth to get Trump elected. Now he's gotten exactly what he wants. Now, from a purely parochial view, Musk has a ton of business before the U.S. government. He is a major federal contractor across a bunch of different lines, and so there certainly is that aspect to it. But remember, Musk is also going to co-lead this unofficial Department of Government Efficiency, which, while it may not be a cabinet-level department or indeed, official part of the federal government as is, it is planning to be highly influential in terms of potential government cuts, in terms of spending priorities, possible reductions. And so if you're someone with business before Trump's Washington, you very much want to get in Elon Musk's ear. He is, as I say, he's highly, highly influential. And I do expect that the sort of core of power that you're seeing in Washington will encompass Musk to some great degree.
All right, Bloomberg senior editor Derek Warbank there. Well, US stocks, meanwhile, just had their best week since the November presidential election, of course, amid optimism over the health of the economy. Investors, though, are going to be keeping a wary eye out for surprise policies under the incoming Trump administration. So for some more on this, let's get the perspective of Sean Darby, Managing Director of Mizuho Securities Asia. So, Sean, we've seen a lot of the Trump trades rebounding recently after losing a bit of steam post-election. But what can we anticipate in the first 100 days for these so-called Trump trades? Have they got a bit of momentum here, or is that played out, in your opinion?
That's a very good question. I think in the first instance, bond yields have sort of done most of the voting for the equity markets in already pushing much, much higher. And certainly that's been also seen in inflation expectations. So there is going to be some cap as to the performance of the growthier stocks, I think, simply because bond yields are much more alert now to inflation risks. And of course, we've seen the Fed cuts being really pushed out now to a pause. I think in the first 100 days, from my perspective, one of the things that's going to have to be really clearly seen is about tax cuts. And the whole agenda on the Tax Cuts and Jobs Acts being actually made permanent, and any of the reforms to tax, I think, is really what the equity market can actually feel as a tangible result from the new administration. While the efforts on things like increasing efficiency within the government and other measures may take a lot of time, it's really the tax changes that I think will be at the forefront of most people's minds in the first 100 days.
All right, tax cuts, more money in people's pockets. Does that sound inflationary to you? I mean, in the last set of Fed minutes, we had a number of Fed members putting in placeholders about things that they weren't particularly sure about. Is this, where do you stand on the inflation risk and how that's going to impact the Fed's thinking here?
Well, I think the difficulty is that the markets had assumed almost a year ago that the US would go into a recession. That, of course, has now reversed very sharply. If you look at indicators, for example, about business formation in the United States, which has remained very, very strong, company forecasts for sales in the United States over the last 2 months post the election result, also highlighting a very strong rebound. The irony is that the bond market might actually turn out to be right very, very quickly. I think the irony may be is that really wage growth never really has come under control anywhere near where we would feel that the Fed would be comfortable. And I think that, again, is probably going to be the surprise package for the new administration. A big wild card would, of course, be much higher headline inflation. The move in energy prices over the last 2 weeks, plus the fact there's been a very silent bull market in agriculture and food prices, might make the mix very, very difficult for the early part of this new administration. So I think the bond market in the first instance is probably right, that actually the inflation expectations might actually rise much quicker as a new administration unfolds its policies.
How disruptive would that be to Asian markets if you also have a much stronger US dollar?
That's a really good question. I think we have to take the view that possibly the path of interest rate cutting here is going to be much slower. And really the sort of last week and this week's BOJ move is really highlighting a big divergence in policies by the central banks here. Indonesian rate cutting and taking a view that we can possibly withstand a strong dollar. The Korean central bank being a dovish hawk, as you described. We're going to get into rate cutting, but not just yet. And of course, the BOJ set to raise rates with a very strong tailwind of inflation. So I would expect emerging markets and Asia to have that same big divergence. Some of the central banks will be constrained in cutting, like the Indian central bank, and possibly those in Latin America still having to tighten. But Central European economies and possibly ASEAN may be able to see some further cuts. But all of it will come down to the fact that whether the level of foreign exchange reserves remains stable in their view if they can make those policy adjustments.
Sean, will it be inevitable that we see a weaker Japanese yen this Friday despite a rate hike? It seems to be this new trend where we continue to see the Japanese yen a little bit stronger before a BOJ decision, despite the fact that you're actually getting tightening rates. You actually get a weaker yen. If it goes on free fall, what are the implications for policymakers here in Japan, especially? Will we see more intervention coming from the finance ministry as well?
I think that's a very moot point. I feel that the BOJ policy will be to keep real rates negative. I think the difference coming into this rate policy move is that not only has it been clearly highlighted or signalled to the markets that there'll be a rate hike, which wasn't the case previously, but this time round, the long end of the JGB curve, along with all of the other G7 yield curves, has all sold off. And in that respect, I think the central banks won't be able to be as complacent as they had been before, purely because there's much more downside risk to the currencies. So really the voting machine in Japan will be much more the long end of the bond market in terms of how the currency reacts, perhaps, and not necessarily what happens at the short end.
Sean, Darby, good to have you with us of Mizuho Securities Asia with a look ahead to a very busy week. Coming up next, we'll look at the potential hurdles still facing TikTok in the U.S. despite Donald Trump's promise of a reprieve. This is Bloomberg. The Chinese-owned social media app TikTok has restored service in the U.S. after briefly going dark to comply with the Supreme Court ruling. The reprieve came after President-elect Trump promised an executive order giving ByteDance 3 more months to find an American buyer for the platform. Our chief North Asia correspondent, Stephen Engel, joins us now with more on this. And Steve, Trump's proposal quite controversial even within his own party. Not surprising given that you see the president-elect pushing back against China, trying to contain its tech ambitions, and yet you have this one company that's supposed to impose a national security threat being singled out and given this reprieve. What is sort of the feeling inside Washington, D.C. right now?
Yeah, there's a lot of contradictions going on here because also the incoming National Security Advisor, Mike Waltz, has acknowledged that Xi Jinping and Donald Trump have talked, and they've talked about TikTok, and they're willing to find a solution together. But at the same time, you have this national security law, which was signed and approved in a bipartisan way back in April, signed by the Biden administration, essentially requiring a full divestiture of the Chinese influence in TikTok, as well as if they don't do that, then that ban would take place on just yesterday, on the 19th. A move, by the way, that was reaffirmed unanimously by the Supreme Court on Friday. But you have now Donald Trump essentially proposing two different things. He's saying, we should find a joint venture partner, an American, and then also the ByteDance, which would own 50-50. But that goes against basically the word of the law of the national security law. And again, as well, this 90-day reprieve to find a buyer also, according to opponents of Donald Trump's executive order move that he is promising to make later today, soon after being inaugurated at noon Washington, D.C. time. So there's some contradictions that could pit Donald Trump and his 90-day extension and his proposal for a 50-50 joint venture in direct conflict with the House Speaker, Mike Johnson. He says there needs to be a full divestiture from the Chinese Communist Party. Also, the Senate Intelligence Chair, Tom Cotton, also a Republican, says there's no legal basis for any kind of extension. So it's very interesting that Donald Trump is taking this position, one of his first executive orders as taking the presidency again. And again, the letter of the law says that there must be a qualified divestiture in motion. To extend this 90-day extension, there must be a process already in motion. We don't have any details of such motion in place.
Yeah, well, let's remember how we got here. Chinese security laws require organizations to cooperate with intelligence gathering. And of course, TikTok has an enormous database now and an enormous number of US citizens. And it was Trump himself that first put this on the radar. What's changed?
Well, he even acknowledged that a lot of younger people use TikTok and a lot of younger people use it for ways of making an earnings, a living, and essentially that he used that for political gain, and perhaps by some accounts it did work. But let's hear from the president-elect, soon to be the new president, on why he thinks there should be an extension and they should find an equitable solution to this problem.
If you don't approve, they're out of business, they're worth nothing. If you do approve, they're worth like $1 trillion. They're worth some crazy number. So I said, I'll approve, but let the United States of America own 50% of TikTok.
And then there's the other situation is that other services also owned by China have risen up the App Store ranks, including Xiaohongshu, Little Red Book, obviously alluding to Mao Zedong's book of thought, Xiaohongshu. It's called Red Note in America. It has had a significant increase in downloads as perhaps a hedge against the ban on TikTok. This obviously still has some ways to play out if indeed Congress certifies that 90-day extension that Trump is going to be making as soon as he takes office afternoon in Washington, D.C. today.
All right, Chief North Asia correspondent Stephen Engel there. We have more ahead on the Asia trade. This is Bloomberg.
As global corporate and political leaders embrace Donald Trump's return to power, many appear to be abandoning some of their previous ideals about equality, diversity, and climate change. And nowhere is this more obvious than at the World Economic Forum getting underway in Davos. Let's bring in Bloomberg News Desk editor Jill Deasy's. And Jill, of course, we have seen a lot of flip-flopping when it comes to what CEOs have been saying about certain issues, not to mention perhaps what some may call some pre-groveling happening already.
Yes, that's right, Shery. I think the way to really think about this week is that as a lot of these big corporates gather in Switzerland, it does seem like there's a bit of a vibe shift in terms of how they approach, this classically very globalist type of summit. You're not really seeing a whole lot of chatter these days about diversity and inclusion initiatives or anything about sort of corporate sustainability and climate change even. It does seem like what you're seeing the corporate world really sort of prepare for is this world where Donald Trump is once again president. And it's a very different sort of vibe this time around versus when he took office during his first term in 2017. At that time, you saw some sort of haphazard conferences that were put together with different CEOs. You didn't really see, sort of the same level of, kind of, as you put it, this pre-groveling that you do this time around. Now, what you're really seeing is more of this embrace of more, sort of Trumpist ideals and sort of a turn away from a lot of those more progressive ideals that have traditionally characterized this conference. Obviously, we still have, maybe 12 hours or so before Trump is actually president, but it really does seem like there's been, sort of that tonal shift over the past several weeks as he's been president-elect, obviously leading up to this conference in Davos.
Yeah, maybe expediency isn't such a dirty word anymore, Jill. Could we anticipate, though, another vibe shift in 4 years' time?
I mean, I think that this was one thing that, as we were talking to people for this big take about was, which time were you lying, essentially, right? It did seem like there was a very, very dramatic tonal shift once Trump actually won the presidency. And so that's really the question here is that, are some of these initiatives being rolled back because this is what some of these corporations actually truly believe, and now they can sort of embrace that? That certainly seems to be maybe the suggestion with somebody like, Facebook CEO and founder Mark Zuckerberg, who does seem to be a little bit more emboldened to embrace some of those ideals that he's maybe presented. But ultimately, I mean, that is really the question here. And I think kind of goes back to this idea that for a lot of these businesses, a lot of these corporations, it really comes down to what can we do that ultimately sort of advances our own interests, our own business interests. And at this point, really, that does come down to sort of working with and pleasing the incoming U.S. administration.
All right, Bloomberg News desk editor Jill Desis there as we look ahead to Davos. And here's just a flavour of the power brokers being interviewed by Bloomberg in Davos this week. We'll have IMF Managing Director Kristalina Georgieva, OpenAI CFO Sarah Fryer joins us as well, Argentinian President Javier Milei, NATO Secretary General Mark Rutte, and BlackRock Chairman and CEO Larry Fink. Alphabet and Google President and Chief Investment Officer Ruth Porat will be joining us as well. So some big names there coming up at Davos on Bloomberg TV. We have more ahead on the Asia trade. This is Bloomberg. All right, let's take a look at how we're tracking in Asia. Mostly a positive session so far. We've got the Nikkei doing pretty well, better by almost 1%. The yen holding on just above 156. The Kospi better by 0.25%. Also some modest upside here in Australia by about 1/3 of 1% after the first 90 minutes of trade. Take a look at Bitcoin there as well. After briefly dipping below 100,000, it is now back above that level. Of course, incoming President Trump seen as being very friendly to crypto markets, and a Trump meme coin that was launched very recently hit a market value of $5.6 billion by Saturday. Shery.
Right. It's really all to do with President Trump, especially on the inauguration week, right? The Chinese-owned social media app TikTok also restoring service in the U.S. after briefly going dark to comply with the Supreme Court ruling. The reprieve coming from Donald Trump. He promised an executive order giving ByteDance 3 more months to find an American buyer for the platform. Let's get more with Jasmine Enberg, principal analyst at market research firm EMarketer. Jasmine, great to have you with us. So you actually say in your notes that going dark for TikTok might have been a brilliant marketing play. Why is that?
Well, absolutely. I believe that TikTok was likely under pressure from app stores and internet service providers, as well as Oracle, which could all face hefty fines if they continued to host the app once the ban took effect. But by abruptly shutting off service, TikTok also got to demonstrate just how deeply unpopular the ban was among its users and how popular the app is overall in the US. It also ends up being a great marketing ploy for Trump. I mean, he was credited even in the shutdown notification, as well as in the restoration notification from TikTok, as being the one who's able to, quote unquote, save TikTok here. And this could be a big political victory for him, especially among American youth, for whom TikTok has become really the center of the internet.
How long will the victory last, though? Because the concerns are around national security, right? I mean, will the executive order actually be able to change the course of things if they don't necessarily find a deal right away?
Yeah, there's a lot of open questions here, and it certainly isn't a long-term solution. The executive order is likely to face legal challenges, including from Republicans, some of whom have already come out against Donald Trump's stance. There's also the possibility that the assurances from Trump just aren't enough for a lot of these companies, again, including app stores and Oracle, to ensure that they believe that they won't be fined. The 90-day extension can also only be triggered if there is significant progress towards a transaction, and we don't really have full details on that quite yet, and we know that ByteDance has repeatedly refused a sale.
So in the meantime, what's going to happen to all those advertising dollars that flow through TikTok? What are the implications for US creators as well?
So in terms of the ad market, if this continues, TikTok's ad dollars would most likely be reallocated primarily to Meta and YouTube, which we believe will rake in about 50% of those reallocated ad dollars. Now, we don't expect advertisers to start reallocating their TikTok ad dollars immediately. But again, they would be the biggest winners here. Creators will probably migrate to Instagram and YouTube as well. We saw some of that start to happen yesterday. I saw one big name influencer, for example, post a carousel on Instagram almost immediately saying, you know, we're hanging out here right now. But besides Meta and YouTube, there is a long list of other beneficiaries here. I mean, TikTok crosses so many different parts of our digital lives. And so I could expect platforms from Amazon to Netflix really to start picking up some time spent, some users, as well as some ad dollars.
Well, it is the fact that it is so embedded in so many Americans' lives now, and also that it is a Chinese national security law that a Chinese company must assist in matters of national security. So none of that has gone away. Are these concerns justifiable, that it does pose a security risk to the US?
Well, I think these concerns are valid, and there is certainly a risk. I think one of the problems is that the government hasn't been able to convince the American public really of these risks. They haven't been able to provide clear evidence to create enough support for this ban. And a lot of times when I'm talking to young people in particular, one of the things that they say all the time is that their data is already out there and that they aren't as concerned about privacy. And of course, it's not just TikTok, you know, that collects data and information on its users. This is something that all social media companies do. It's just that TikTok happens to be owned by a Chinese company.
And just broadly speaking, I mean, given the start of the Trump administration again, are we expecting just broader deregulation in the tech industry, which seems to be sort of the broad theme here with this incoming administration?
Yeah, we're certainly seeing that social media is being remade for the Trump era. We're seeing that from platforms from Meta now all the way to TikTok. I think there is a fear among a lot of users right now, given Trump's heavy hand in restoring access to TikTok in terms of what the app could look like going forward. We know that Facebook and Instagram, for example, have loosened a lot of the restrictions on political content, done away with some of the third-party fact-checking, and all of that could really reshape social media to be more favorable to the Trump administration.
Exactly. Even when it comes to Mark Zuckerberg, we have seen him really add some of those Trump supporters into his board even. So what can we expect in terms of this new cozying up between the Trump administration and perhaps these tech giants?
Well, we're seeing this really across the board with all these tech giants trying to curry Trump's favor, right? I mean, we could see a big shift in terms of how political content is treated on these platforms. I think we're already starting to see the beginnings of that. We know that social platforms are places where people go to get news and political information, and we're seeing a strong polarization on many of these platforms. And I think that that is going to persist and exacerbate over the next 4 years.
All right, Jasmine Enberg, Vice President and Principal Analyst at EMarketer. Thanks so much for joining us today. Now, China is facing a repeat of the tensions and uncertainty from the first Trump presidency, only this time with a weaker economy that's even more reliant on exports. China correspondent Min Min Lo joins us in Hong Kong. And Min Min, it's going to be an eventful week. What can we anticipate in terms of tariffs and a potential trade war?
I mean, it's hard to say because Trump has threatened up to 60% tariffs on Chinese goods. But after he won the election, he had said he could be considering 10% additional tariffs on top of the existing levy. So no one really knows how that trade negotiation will go. And as you heard earlier, that whole conversation around TikTok will likely factor into negotiations as well. But you can see that last year, China's trade surplus was at a record high, close to $1 trillion. That's 5% of China's GDP. Exports had been the bright spot for China last year, and it's going to be a big vulnerability this year given the threat of tariffs. And we have seen what's different now compared to, say, 5, 6, 7 years ago is that there has already been some sort of trade diversification going on. U.S. direct purchase of Chinese shipments have fallen from about 19% in 2017 to less than 15% now. And China, meanwhile, is selling a lot more goods to countries like Vietnam, for example, just as Vietnam's trade surplus with the U.S. has ballooned to be the third largest, right after China and Mexico. So countries like Vietnam are becoming this sort of transshipment hub, buying goods from China, selling it to the U.S. So when you look at final demand for Chinese goods, U.S. is still a big player here, buying up about 3% worth of Chinese GDP's worth of goods last year.
We have seen that phone conversation between President-elect Trump and President Xi Jinping. Can we expect at least some cooling of tensions in the first few days of the Trump administration? What will you be watching out for in order to gauge the future relationship of these two countries?
Well, China's readout of that phone call had mentioned that Trump was looking forward to meet Xi, which sort of confirms some of the other reports we have heard from Wall Street Journal, for example, hearing from sources that Trump's team is looking to set up a sort of meeting for Trump to visit China, maybe in his first 100 days in office. And a key point in that Chinese media readout as well highlighted China's stance on Taiwan, its sovereignty over Taiwan, cautioning the U.S. to proceed carefully on that front. Not a lot of actual practical matters when it comes to fentanyl or even TikTok. There was a mention in the readout, although that has been covered heavily by Western media. But the focus of the Chinese readout, the tone there is really quite different, with 5-6 paragraphs really focusing on just rebuilding this relations between the two sides, talking about carving out more space for cooperation. There has been 2 editorials on Chinese state-linked media, People's Daily and the Global Times, really talking about restarting this relationship from a new starting point. So there is very clear intention, at least from the Chinese side, to try to make things better or start things on a better note at the start of Trump's administration. So we'll have to see how negotiations go from here.
All right, Bloomberg's China correspondent Min Min Lo there. Other geopolitical stories that we're following. China's military says it conducted naval and air combat readiness patrols in the South China Sea on Friday and Saturday. A statement by the Southern Theater Command did not specify exactly where the patrols happened. On Friday, the Philippine Navy said it was holding drills near a disputed shoal where a large Chinese vessel had been seen. A South Korean court has issued a fresh warrant to formally detain impeached President Yoon Suk-Yeol. It allows investigators to keep him in custody for up to 20 days as they look into criminal allegations over his martial law declaration. If charged within that period, Yoon will stand trial and can be detained for up to 6 months. More ahead on the Asia trade. This is Bloomberg.
Big week for earnings as well. SK Hynix, Disco, and Nidec are some of the big Asian companies reporting results. Do watch out this week, especially TSMC having projected strong quarterly sales. That's fueled hopes that AI hardware spending remains resilient. NVIDIA suppliers SK Hynix and Disco are expected to report positive earnings thanks to the newly announced Blackwell chip product line. Let's bring in Bloomberg News earnings specialist Rena Sasaki. Rena, it seems that AI will be again the key focus for this year as we head into earnings results as well. What are you expecting, first of all, from one of the leaders in this industry, which is SK Hynix?
Yes, so SK Hynix, the results, we're expecting their earnings to surge from a year earlier. From relatively low basis, and for quarterly growth, we're expecting it to grow thanks to the higher average selling price for DRAM chips and the robust demand for the memory chips for AI. And yes, so.
What about the rest of the sector? Of course, we're watching in the tech space, Nidec, Disco as well.
Yeah, so for Disco and Nidec, we're expecting their third quarter result to grow double-digit this quarter, thanks to the AI-related the demand. And as for Nidec, some analysts are expecting that the hype around the AI business could be risky given the lofty expectation. But the outlook for the NVIDIA suppliers, SK Hynix and the Nidec, are the same positive thanks to the recently announced the product line.
Raina, we're going to hear from a number of Indian banks as well. To what degree might they suffer in an environment of falling wages and rising inflation?
Yes, so the falling wages and high inflation are expected to dent the earnings of HDFC and Hindustan Unilever as they report on Wednesday. HDFC is projected to post a slower profit growth as it prioritized the loan deposit ratio over lending growth. And Hindustan Unilever is expected to post around 5% of net income growth thanks to the price increase. But the margin might have suffered and then shrunk given the higher low material costs, including coffee and then cocoa. And then the sales volume is expected to slow down despite the festive seasons in India.
Bloomberg News earnings specialist Rena Sasaki here with what to expect from the Japanese and Indian markets this week. But let's take a look at how Rakuten is trading right now. The e-commerce giant is rebounding from losses that we've seen in the past session on Friday, just rising with the broad market as well. However, when it comes to the past year, we have seen outperformance gaining more than 30% from its summer low. Rakuten Group CEO Hiroshi Mikitani dismissing skeptics who call the Japanese e-commerce giant's mobile foray a mistake. Mikitani told us exclusively that the company's telecom arm is central for future growth through artificial intelligence.
Whether you can utilize AI and in a very efficient and economical way or not is a key. I'll give you an example that, of course, when Google started shopping search, everybody said, oh, man, Google is going to take over shopping world, right? The fact is, it was not, right? Amazon, Rakuten, maybe some other e-commerce companies are very, very strong. So I think and we don't use Google search. We have developed our own search. So there's two things. One is what we call very strong AI, which is like a generative AI. like OpenAI or Gemini or whatever. And there's more, vertically specific AI, which we call it weak AI. So we have no intent to compete against, OpenAI or Google, but we will actually build the more vertically integrated specialized AI.
Within Rakuten?
Within Rakuten, with our own large language model. Of course, we use the external third-party LLM, but also we are developing our own.
How much of that development is in-house? Because I do know that you have strategic cooperation with OpenAI as well.
Yes. So generative AI, again, we use OpenAI. Sometimes we hybrid with our internal large language model. So if we just think the question or prompt is about shopping, we use it. But if I ask about medical questions, we cannot do this. So we go to OpenAI or third-party AI.
The future of artificial intelligence takes so much energy. Is there enough energy to power that change here in Japan?
Well, of course, two things. One, of course, just GPU will consume more electricity, but it depends on the design of your architecture, right? Do you need to compute everything from scratch, or can you memorize some of the question that's being asked and you process already for a longer time by caching the knowledge? Is it possible or not? And at the same time, using AI, in general, we may be able to reduce electricity consumption. 90% of electricity we're using in Rakuten Group is coming from mobile business. Of course, we have a big data center. All these radio stations use electricity. But in 2025, we are going to reduce our electricity consumption by 20% using AI.
And I know that in itself, when it comes to energy efficiency, you're carrying out trials with Ampere in order to cut some of that energy usage as well. What are your plans on that cooperation? Because we're also hearing that SoftBank's arm perhaps wants to take over that business as well.
Well, with regard to semiconductor, we are not really sure. Of course, ARM is a beautiful architecture. I know that Masa is making big bet on it, but so was other semiconductor companies. But I think the architecture will become more and more efficient, and we want to be platform agnostic. So whoever we can partner, we'll partner.
So do you ever think, I should be owning one of those as well for my future long term?
No, in a big scale. It's not our business. Our business is more centric in utilizing data, providing a better experience to the consumer, and let them, transact. So that's our business, except our mobile network technology business. Because I think what we have done in Japan is not only disruptive in terms of the customer, but technologically it's fundamentally totally different from what other carriers has been building.
And that was part 2 of our exclusive conversation with Rakuten CEO Hiroshi Mikitani. And there's more coming up. We did get exclusive access as well to Rakuten's headquarters in Tokyo. We discussed their investments in sports, medical research, as well as how they're bracing for the Trump administration. That's coming up on The Insight at midday in Tokyo. More ahead on the Asia Trade. This is Bloomberg.
Hyundai and India-based TVS Motor are exploring a partnership to make electric three-wheelers and micro four-wheelers for the last-mile mobility market in India. They presented concept models at a car show in New Delhi, announcing that Hyundai will focus on the design, engineering and technology. TVS, meanwhile, will manufacture, market and co-develop the vehicles. Instagram has announced a new video editing app called Edits to be set to be launched in February. Now, the announcement comes as rival TikTok faces uncertainty in the US due to a federal sale or ban law. TikTok's parent ByteDance owns a popular video editing app called CapCut, which was also taken offline in the US. Shery.
Yeah, Paul, take a look at some of the stocks that we'll be watching when markets open in Hong Kong and mainland China. Watching the EV space closely. Specifically, keep an eye on BYD. That's after accounting consultancy GMT Research reported that the company's reliance on supply chain financing has masked surging debt levels, Paul.
Let's take a look at what's going on in the commodities space. I want to start off on iron ore. It's had an uncharacteristically good run recently. Iron ore on a 7-day win streak at the moment. Currently still holding on above $104. One of the better performing stocks on the ASX today is Fortescue Metals as well, where it's a pure play iron ore stock. And the cyclone that was approaching the west coast of Western Australia, Cyclone Sean, a Category 3 storm, heading out to sea now. So Port Hedland, which is the world's biggest iron ore terminal, has resumed operations. Take a look at oil prices as well. Also had a good few weeks. Crude 78.47 at the moment, Shery.
And we may get a good start for other markets that are setting up for trade, especially in China. You can see A50 futures are closed, pointing to the upside of 0.7%. Renewed optimism, perhaps in some relief, with Trump and Chinese leader Xi Jinping holding a phone conversation. U.S. futures not doing much. Markets closed on the Monday session for a holiday, but we're seeing Asian stocks right now broadly gaining ground. We do have China's commercial banks announcing their 1- and 5-year loan prime rates later today. This is Bloomberg.